Imagine a single year that could redefine the entire global economy. A year where everything you think you know about markets could change forever. 2026 isn't just another year. It could be the year markets shift in ways most investors won't see coming. Stocks, bonds, even real estate could face changes that ripple through every portfolio, every retirement account, every savings plan. And the most shocking part? Most people are completely unprepared. So today, we're going to uncover why 2026 might be the most pivotal market year in decades, and why understanding it could save or make you thousands, even millions. Let's start with some numbers. The global economy is more leveraged than ever. Debt across governments, corporations, and households has reached levels never seen outside of wartime or crisis periods. The US alone is projected to have $36 trillion in national debt by 2026, while interest rates are rising after years near zero. This is not a minor shift, it's a massive financial pressure cooker quietly building. Meanwhile, inflation, though seemingly tamed in 2025, could spike again due to supply chain vulnerabilities, energy crises, and geopolitical tensions. Investors think markets are stable because the S&P 500 keeps hitting new highs, but history shows that complacency is often the prelude to collapse. And here's the kicker. Global central banks are running out of tools. Quantitative easing? Done. Interest rate cuts? Already near historic lows. 2026 may mark the year when traditional safety nets stop working and markets respond in ways nobody expects. 1. Rising interest rates and debt pressure. For years, companies and governments have borrowed cheaply, but 2026 is projected to see interest rates stabilize at multi-year highs. That means debt servicing costs rise dramatically. Example, a company with $100 billion in debt paying 2% interest suddenly faces 6 to 7% rates. That's a 3 to 4x jump in annual payments, money that comes directly out of earnings. Multiply that across every major corporation, government bond, and mortgage, and you have a market-wide squeeze. 2. Global geopolitical shifts. China, Europe, and emerging markets are slowly moving away from the US dollar system. Countries are increasing gold reserves and diversifying currencies. For decades, US markets benefited from the dollar as the global reserve currency. 2026 might be the year this advantage erodes, leading to volatility in equities, commodities, and even cryptocurrency. Inflation and purchasing power. The silent killer of wealth is inflation. Even a 5 to 6% rise in consumer prices can erode real returns in stocks, bonds, and cash. By 2026, if inflation outpaces wage growth again, consumer spending could slow sharply, and companies dependent on discretionary spending might see earnings collapse. 4. Market technicals and valuations. By early 2026, stock markets may be at valuations rarely seen outside bubble periods. P/E ratios in the tech sector, for example, could rival 2000.com levels. History tells us high valuations plus rising rates plus global uncertainty equals turning points. 5. Technology and AI disruption. 2026 will also see AI and automation reshape sectors rapidly. Companies slow to adopt these technologies may collapse, while new players could dominate, causing sudden market rotations that traditional investors won't anticipate. So, what does this all mean? 2026 isn't just another year. It could be a pivot point where markets restructure entirely. Some sectors will boom, others will crash silently. Safe-looking portfolios may lose value if you ignore hidden risks like inflation, interest rates, and global currency shifts. The truth is, most investors will be blindsided. Why? Because the shifts will be slow, silent, and invisible, until one day the numbers don't lie. But here's the opportunity. If you understand the forces shaping 2026, you can position yourself ahead of the curve. Invest in gold and hard assets, diversify globally, and understand debt and interest trends. 2026 may mark the year the markets demand smarter, sharper, and more informed investors. Those who prepare now won't just survive, they could thrive while others panic. Call to action. Outro. If you want to stay ahead of market turning points, subscribe now. We break down hidden forces behind money, investing, and global finance every week so you're never caught off guard. Remember, knowledge is the most powerful currency. 2026 will separate the prepared from the unprepared. Which side will you be on?